Welcome, everybody. Steven Sitkowski here. This is my Building Wealth podcast. It is the 3rd of August. I'm recording this on Monday. Hope all of you had a splendid weekend. I was teaching a 2-day option trading course for a couple hundred people. Went great. A lot of fun. It's always great to watch the light bulbs come off for individuals. We are off to a much better start to this week. We closed last week and the market's pretty strong and off to a roaring start today. Now, things could shift between now and whenever you watch this. If you watch it today, then you're going to go, yeah, we're off to a roaring start. If you're watching it Tuesday, Wednesday, Thursday, who knows where the market is then? Whole lots of volatility. We'll be talking about that a whole lot more. I had a request for some training on mitigating or protecting downside risk. So at the end, I've got a handful of strategies for you on how you can protect your positions. I think that's fairly prudent, especially in a market like this one. So let me go ahead and share my screen with you. Get everything rocking and rolling. I always look forward to doing these. Just kind of fun. Sit here at my home, look at the view, chat with all of you good folks. It's pretty cool. So you can see my email on the screen. For those of you that are watching this on your computer, I realize some of you are in audio only mode, but if you can see it, awesome. If you can't, let me give it to you. So if you've got recommendations for topics or questions you'd like me to address on the show, I'm happy to do that. My email is Steve Sitkowski. That's STEVE SITKOWSKI @gmail.com. A little bit of my background there. So I've been working with people and their money now for some 45 years. I've trained somewhere between 1.5 million and 2 million people. Candidly, it might be more than that at this point. But I absolutely love teaching, really at any level. I've coached before. I've been a professor's assistant when I was going to college, been a Sunday school teacher. So this is just kind of an extension of all of that. Everything we do here is for educational purposes only. It is not intended as investment advice. Rather, I'm just sharing with you things that I see about the market. And, I may comment from time to time on opportunities, but I don't know that those opportunities are appropriate for everybody. I don't know what your risk tolerance is, your experience, how closely you watch your accounts, etc. But you sure walk away with a lot of good ideas. So what's moving the markets? Well, the markets continue to bounce back. We had a nice day on Friday. Um, we had a nice day after the Fed announcement on Wednesday. So Wednesday, um, the Fed announced that they were going to keep interest rates where they are. No problem. Then we had the press conference with Kevin Warsh, the new chairman. Markets were actually moving up and moved into positive territory. And then it's like one by one, everybody started jumping off of a cliff. And the markets closed down pretty significantly, like 1.5% on the S&P, 2% on the NASDAQ for no apparent reason. And then we had a couple of earnings announcements after the close, and then the markets recovered on Thursday and did well on Friday, and today they're doing great. Amazon, which announced earnings, has hit the $3 trillion market cap level. I jokingly tell people I remember when $1 million was a lot of money, and then $1 billion was a lot of money. Now it's a trillion. That's a lot of money. And there are a number of companies that are now in the $1 trillion category. And then we've got one individual, Elon Musk, who has a net worth of $1 trillion. Think about that one. Trump canceled planned attacks on Iran. So he made that announcement on Sunday. I'm thinking there's a good chance that that is why um, the market is doing so well today. SpaceX delivers their first earnings announcement on Tuesday. So depending on your when you watch this, that could have already happened or is about to happen. But it will be really interesting to sort of see how that plays out. Let's see where their stock is right now. SpaceX, $110 a share, which is actually up some. It's up a couple bucks on the day. So in that stock, it had an IPO price of 135, but once it started trading, it instantly was at 150. So people that bought it at 150 are now sitting on it at 110. Just goes to show you better know what you're buying and why you're buying it. 10-year Treasury. Let me give you the latest on these. Um, let's see. It'll be current as of this moment in time for me. So we're loading this up. And let's see, bonds. 10-year Treasury is now at 4.684. So up a little bit from here. And let's see where oil is. Oil's dipped a bit since I posted this at 80.41. So that's a big improvement. Oil was up over 90 not long ago. So it's right back down to about 80. Now, when the war started, we were at 62. So, talk to me when we got a six handle on that number, but definitely moving in the right direction. So let's take a look at last week's market breadth. So we have the New York Stock Exchange and we have the NASDAQ. So on the left, NYSE, on the right, the NASDAQ. So the first thing we want to look at, number of stocks that were up versus down. So we finished in the green there, 1,533 stocks were higher, 1,282 were lower. On the NASDAQ, 2,657 were higher, 2,501 stocks were lower. So more winners and losers on the NASDAQ as well. New highs versus new lows. On the NYSE, 286 new 52-week highs, 189 52-week lows. Very nice. That's all bullish. How about on the NASDAQ? Well, if you remember last week, we had 3 or 4 times as many new lows as highs. This week, it's got a little closer. 468 new highs, 692 new lows. So it wasn't a fantastic week because we had that one disaster day, but all in all, not bad. Here's last week's heat map. So you can see very clearly some of the stocks that have announced earnings in the last little bit and the way that they've moved. So we've got Alphabet, formerly known as Google, up 11%. Amazon, we talked about that, up 17%. Microsoft, up 21% on the week. Now, on the downside, Micron lost 10%, AMD lost 10%. So it's kind of a tale of two cities. If you're a winner, you're probably up pretty big. Loser probably got slapped around a little bit. And that's what happened last week. Seasonality. So August and September are the weakest months of the year for stocks. They're the only 2 months where stocks on average go down. A lot of people believe that October is a down month. It is not, it's an up month. October is typically the most volatile month of the year, but that doesn't make it a down month. So generally, in August, market's down about a 0.5%, September almost 1%. So during this time of year, my trading partner and I, we just get a little more cautious, a bit more conservative on the trades that we take. We're looking for more premium kind of setups. Consumer confidence is on the rise. So look where it's come from May to June to July, up, up, up. We're starting to approach the peak that we saw in January and February of this year. Um, I don't know what this new confidence is derived from. I mean, certainly we haven't solved our geopolitical events, but maybe that's when the survey was done in the midst of a ceasefire when people are starting to feel better. I think there's still, just generally speaking, a whole lot of angst out there. Value stocks have been taking the lead. So, for those of you who can see my screen, the dark blue line, those are value stocks. So, those are typically stocks that are trading at lower PE ratios or lower PEG ratios that don't have as much upside. So, this is kind of a flight to safety, as it were. So the momentum stocks have completely rolled over, and growth stocks rolled over as well. Now, this has only been going on since kind of the mid part of June. So it's not a long-term deal, but definitely worth noting. So here is a major change and how a lot of, especially these big AI hyper, um, infrastructure companies, um, are handling their finances, these hyperscalers, as it were. So they're taking a larger and larger portion of what they're bringing in and spending it mostly to develop AI or new chips or data centers. And I'm telling you, Wall Street is starting to get a little sick of it. Sort of reminds me of the early days of Amazon. When everything that came in, they would just reinvest, reinvest, reinvest. And it wasn't until they demonstrated a real return on their capital that the stock started moving up to the levels where we now see it. So we are expecting this trend to continue. For 2026, basically, we're looking for these companies to spend everything that they net. In 2027, we're expecting them to spend more. But this is in the anticipation of a return. So it just makes things a bit more speculative. I think they're sort of caught in a race, and nobody knows for sure where the Goldilocks level is. But if you're not out there spending on AI, then the market considers you to be losing ground to everybody else and your stock gets punished. If you spend too much, then they could get concerned about whether or not there'll be enough of a return on that expenditure. So you got to sort of thread the needle if you want your stock to do well. So, yeah, this is for the five leading tech companies. That would include Alphabet, Microsoft, Meta, Amazon, and Oracle. Fed is turning hawkish while inflation has kind of rolled over. We had really good CPI prints. I mean, they were negative, um, negative inflation month over month. It was down 0.4%. And yet the Fed members are getting more hawkish. They want, and in fact, even though the Fed did not raise interest rates, there were three dissenting members who wanted to raise 0.25%. It looks like, based on the forecast, they're going to get their wish pretty soon. One of the things that history has shown us is the markets generally do not like a change at the Fed. So on May 15th, Jerome Powell left office, Kevin Warsh took office. And hey, maybe it'll be different this time, but on average, the market falls 12% the 3 months after the new appointment. So that's the max 3 month drawdown. Now, you want the good news? 1 year after that 3 month drawdown, the market is up 12.6%. So, and it's up 75% of the time. But we're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 Fed chairmen. Every single one 3 months later, the market was lower. Can we break the streak? If we do, it's going to be because earnings have been so incredible. Look at this. So when you look at aggregate earnings surprise from companies reporting so far, Bloomberg AI value chain, over 60%. Of the NASDAQ 100, about 50%. It has been an incredible, it's been the best earnings quarter that we have seen for many, many years. And at the end of the day, earnings are how a company is valued. So as earnings go up, value of the company goes up, and over time, at least, the price of the stock will go up. So all of that bodes well for the future. Now, here's something to be mindful of. In the US, we have midterms coming up this November. And about September, you start to see the market selling off September and October. And then it sort of gets back to where it was in November and then tends to go higher after that. And my own hypothesis on this is that, during elections, there's so much mud being thrown. There's just negativity, negativity, negativity. And investors start feeling negative. And what do you do when you're not feeling well? You sell. When you sell, you drive stock prices lower. Market sentiment. So it ticked up from last week. On July 22nd, 29.6% of respondents to a survey that goes out to the American Association of Independent Investors, 29.6% said they believe the market would go higher over the next 6 months, whereas 42.3% thought it would go lower. Well, on the 29th, 31%, slightly better, said it would go higher, compared to 42%, same 42% who thought it would go lower. So it's improved, not a ton. If we continue to get this advancement with stocks, I think you'll see that number shoot higher. But we are definitely less bullish right now than we have been historically. Historically, 37.5% of investors think the market will go up over the next 6 months. 31% think it'll go down. Now it's 31% who think it'll go up, and 42% who believe it will go lower. The fear greed index kind of creeped back into neutral, but barely at the lowest possible number. So you can see previous close, we're in fear. A week ago, fear. A month ago, fear. A year ago, neutral. So it's taken us a year. Now, this changes from day to day. But right now, we're kind of low neutral. And I think that's reasonable. We definitely shouldn't be in greed or extreme greed. So I think low neutral, yeah. Future of interest rates. All right. So what are we expecting? This is the latest forecast. So as of right now, there is a 66.7% probability, which is two-thirds chance, that we will get a 25 basis point rate increase in September. And if that happens, it's going to be very interesting to see the response from President Trump because he put in a guy I'm sure he thought would cut rates, but he didn't tell Warsh at the time of the appointment, by the way, we're going to go into a war and you're going to be dealing with $100 a barrel oil prices and higher inflation, right? So nobody saw that coming at that time. So he's going to have to deal with what he's got. Um, but I also think politically it could be tough for him to pull the trigger on a rate hike, but he could be outvoted um, by the rest of his colleagues. We are now expecting a second rate hike in January of 2027. So all of this is subject to change. If we can get the war done in Iran, and I'm telling you, the Republicans need that to happen for political reasons, are they going to be going into midterm elections? If they go into midterm elections and inflation is still crazy and interest rates are high and gas prices are high, not only are they liable to lose the House, but they might lose the Senate as well. Right now, kind of the belief is that the Republicans are going to hold barely onto the majority in the Senate and lose the House. You come in with a lousy economy and a war that's gone on and on and on that's costing a ton of money, you're going to lose both, in my opinion. Sector performance year to date, we are back up over 10%. S&P is up 10.99%. People said I was crazy when I said we would get a double-digit return. Now the year's not over, but that was all predicated on higher earnings, which was forecasted. Now, I hadn't factored in that we were going to have a war, but in spite of the war, the earnings have carried the day. The big winner, energy, we throw that out because that's all war driven. So then who are the big winners? Industrials and technology, both up over 17%. What's driving them? Industrials, that's AI, data center construction. Technology is the earnings growth rate. We no longer have a sector in the red. All of them are positive year to date. This week's earnings. So what do we have that could move the market? Well, after the bell today, Palantir, that'll be interesting. On Tuesday, Caterpillar, McDonald's. McDonald's gives you insight as to people who will eat damn near anything. No, to the consumer. AMD, I'm trying to think when the last time I was in a McDonald's. It's a lot of years. Hmm. AMD, that should be fairly telling. SpaceX, after the market closes. So, will that give them a boost or are they going to have some more challenges? And that one, that's a flip of the coin. I couldn't tell you. On Wednesday, Eli Lilly is coming out. Uber, It's always good for the consumer. SanDisk has made huge moves this year. AppLovin, Beyond Meat. I root for Beyond Meat as vegetarian. I eat a lot of their stuff. I want them to be successful. I like everything they stand for. Let's see. I don't really see anything going to move the market on. I mean, there are some AI plays. Um, D-Wave, Datadog, ServiceNow software, and Oklo. They make the little nuclear reactors. That's Friday Vista Energy, another AI related play. So this is going to be a pretty significant earnings week. So if we can keep the ball rolling on earnings, we might end up with a really good week. And certainly we're off to a great start. All right, what's the big news of the week? Let's take a look and see what we want to be keeping an eye on. Quite a bit, actually. So our ISM manufacturing number came in better than expected. All right, that's good news. That was today. On Tuesday, job openings. So we're expecting that there's some 7.5 million available jobs. That'd be down a little bit from last month. Then we start getting serious. Wednesday, ADP employment number. How many new jobs did we create for the month? That's going to be a big deal. We're going to get the ISM services number on Thursday, as we do every Thursday, initial jobless claims. And on Friday, we get the US employment report, the unemployment rate. They're expecting it to tick up from 4.2 to 4.3. Hourly wages, we're expecting them to go up 0.3% month over month. So, um, when you consider all of the earnings announcements, and then you add to it the fact that we've got a fair bit of news coming out, could be a very interesting week. All right, let's take a look at the charts. When in doubt, it's all on the charts. So the first thing we're going to take a look at is the SPX, which is the S&P 500. And I've got some really good news. We're above the 50-day moving average, which is pretty awesome. And we are approaching the all-time high. So we had a close here at 2609. We're at 2607. So we have broken out of that little wedge shape that we had, and we've broken to the upside. If we can clear about 2610 and the earnings keep a rolling and nothing dumb happens in the Middle East, meaning, we escalate, we could be in for a really nice ride after a basically solid first half of this year. What does the intraday look like? Give us some insights into tomorrow. I mean, that's as good a looking intraday chart as you'll see. Market opened higher and gradually climbed all day without any real pullback to speak of. Man, I'll take another one of those, please. That was delicious. How about the Qs? So this is basically big tech. So it is still below its 50-day moving average. And the 50-day has kind of rolled over a little bit. The MACD is getting ready to cross into green, it appears. So it's definitely got a little V-shaped recovery. I'll feel better about this when it crosses above its 50-day. So it's a ways off of that. That would be at 714. And the high on this was almost 750, and we're at 700. So we are not anywhere near, we're not terribly far away, but we're not close to the all-time high. Let's look at the VIX, which is the volatility index. Some refer to it as the fear index. And look at that. We are right back down close to 15. We're at 1581, which basically means um, people aren't paying for protection and they feel pretty good about things. So, yeah, all of that, that's just all great. Couldn't be better. All right, let's see what else I got for you. So, your request, and by the way, I'll show you another trade that we closed on Friday from our trade ideas. So that's still to come. But protecting downside risk. Okay. So, how can you do that? Let's say that you own a stock trading for $100 a share. So you got $100 a share worth of risk. What do we do to bring that down? Okay. So the first thing I would tell you is knowing when it's time to sell. There's your first strategy. Okay. So how do you know when it's time to sell? Well, one of two things. Either the fundamentals have changed, meaning the numbers on the business, you start seeing revenue fall, the company disappoints during an earnings announcement. That'd be one signal it's time to get out. The other one is pay attention to the 50-day moving average. Historically, when a stock falls below the 50-day, that will trigger additional selling, and you will watch stock prices fall at that point. If you go back, make a list of 5 stocks where you've lost money. I know that'd be painful, but just do it. Pull them up on a chart and ask yourself this question. How much better off would I have been if I'd have gotten out of this stock when it crossed below the 50-day? And I think that I will have made my case to you. Next, using what's called a stop order. So a stop order is where you set a price. So let's say, you got to decide what your risk tolerance is. And maybe your risk tolerance is 15%. So you would set a stop at 85. So in the event that this stock came down and hit $85 a share, you're automatically sold out. Now, keep something in mind. Can you buy the stock back? So once it's done going down and starts turning around, can you repurchase it? Of course you can. So a stop is designed to avoid, the 40, 50, 60% drop that some stocks will have. And the third recommendation I have for you is using put options. So a put option is a type of option that gives you the right to sell a stock at a certain price for a certain period of time. So what if you had a put of, say, 95? What that means is that no matter what happens with this $100 stock, you're going to get at least $95 a share. Pretty remarkable. So you don't have to just sit there and absorb every time the market sells off and take on those losses, right? You gotta let your winners run and cut your losers short. Difference between being a pro and an amateur. So, again, my email, stevesitkowski@gmail.com. If you have comments, questions, topics, you'd like for me to cover, hit me up. As you can see, I'm doing some for people every single week. On our latest trade idea of the week, it was a call spread on MS is Morgan Stanley, the big investment bank. Um, and we went short the 205 strike call. We went long the 202.50 strike call. We had an expiration of July 31st. We made 18.1% in 19 days. Kind of cool. Great class. Really appreciate you checking it out. The group that's watching is growing. It's pretty amazing. I think we're somewhere between 500,000 and 1 million people a month now reviewing this. So, what I've tried to do is to make the markets understandable for the average person. That's what I'm trying to do. Say, hey, these are some things you should be looking at. This is what's impacting the market, so pay attention and so forth. I think we're doing a pretty good job of it. And apparently you agree because you're here. All right, we'll see you next week. Until then, be safe, be blessed. Bye for now.